IVM.
Hi listeners, we at Aditya Birla Sun Life Mutual Fund have come up with a special podcast series called MF101 in collaboration with Bloomberg Quint. MF101 is an informative series that will help you understand the recipe behind mutual fund investments. And what's more, it's coming from the chefs of the mutual fund buffet table, from the very own fund managers and analysts who are the manufacturers of the funds that help you realize your investment goals. I'm your host Anupam Gupta, B50 on Twitter, and in this opening episode, we start with the year 2019's outlook towards the equity market and economic scenario with the head chef, Mr. Mahesh Patil, CIO, Equity, Aditya Birla Sun Life Mutual Fund. Mahesh, welcome to the show. Tell us something about yourself.
Let me first wish all our viewers a very happy and prosperous 2019. So I started my career as did my engineering and did my MBA from JBIMS in 93, worked there as a research analyst, and then joined Aditya Birla Sun Life Mutual Fund in 2005 as a fund manager, and been there for 13 years, managing a team of 7 fund managers and 20 analysts, and heading the equity function at this point in time.
What happened in 2018? It was such a rough year. I was just looking somewhere. I think the best return that was there was probably on a liquid fund or something. So what happened in 2018 in the stock market?
Yeah, I think if you go back and look at 2018, it was a period of reversals, and it was not only equities, but across asset classes, the returns were negative. Be it bonds, emerging market equities, developed market equities, even gold, the returns were negative. So it was a very difficult year. So 2018 was a period of a lot of volatility because of the strong US dollar. We saw currency volatility across various countries. Even oil prices shot up. So the macro picture, which was looking good in 2017, turned a bit adverse, and that led to correction across asset classes.
So now here we are at the start of 2019, and we know that there are two broad drivers to the stock markets. One is the macroeconomic perspective, the outlook on GDP growth, stuff like that. And the second is liquidity. We know that the inflows into mutual funds have been very strong. From that perspective, how are the markets looking to you?
So as we step into 2019, a lot of the clouds which were there on the macro front, I think they have started to ease off. So we'll take one by one. So on the global front, okay, the US economy, which was doing very strong and ended 2018 on a strong note, is showing signs of kind of slowing down. And that is, I would say, there's some slowdown in the overall global growth, which has meant that the strong US dollar strength, what we saw last year, okay, US dollar rallied by almost 9 to 10%, and that has kind of peaked out. And as a result, I think it will be good for emerging markets, because whenever we see a stronger US dollar, there is outflow of capital from emerging markets. And that leads to vulnerability for emerging markets in terms of their currencies. And over a period of time, we've seen the emerging markets have been able to repair their balance sheets. The debt to GDP ratio has come down. So overall, I think, and with Forex reserves being fairly comfortable at around $400 billion, I think rupee should also be fairly range bound. So rupee was fairly range bound and steady, okay, in CY 16 and 17. 18 we saw almost 8-10% appreciation. This year I think rupee will probably move in a band of around 3 to 4% is what we think, which is good for a lot of for investors looking into it. So I think on the macro front, I think, as I said earlier, the headwinds which were there are kind of easing off. And I think that should be good from at least starting point for the outlook for equity in 2019.
Mahesh, that's great from a macroeconomic perspective. Anything specifically on interest rates and inflation?
Yeah, so the interest rate, if you look at inflation, globally has surprised on the lower side. I mean, who would have thought with oil prices going to around 80 plus, with currency depreciation? I mean, most people would have thought that inflation will zoom up in CY18. But as you know, headline inflation is trending at around 3% or so. And I think the real surprise has come from food inflation. So food inflation has consistently surprised on the lower side. I think over a period of time, I think we've seen a lot of productivity on food has actually increased and has grown much more than the actual consumption of food grains and other items. So I think that has really put the inflation under check. Even the core inflation has been fairly steady at around 6% or so. So I think inflation will probably undershoot the RBI's target. And given that, I think the outlook on interest rates, we feel that there'll be a pause in rate hike and probably a reversal of that if inflation remains below 4%. So overall, I think it should be a fairly benign scenario in terms of interest rates and should remain here without any upward bias.
Sure. Just one last thing here on the broader perspective is on the liquidity flows, right? Because the last couple of years, one of the big features for stock markets in India have been the increasing retail participation. For example, I was just reading that day that as per AMFI, there are 2.5 crore accounts which are doing an SIP of an average ticket size of 3,000 rupees, which translates to more than 8,000 crores per month. That's like $1 billion plus dollars each and every month. How do you think that's going to shape out in the next couple of years? And is that going to be a factor that's going to actually support stock markets?
So I think post the demonetization, we have seen significant inflows into mutual funds and mainly into equities. The initial burst of money which came in after demonetization, that has slowed down because that was money which was moving in from bank deposits and getting into equities. That flow has ebbed, but a lot of investors looking at long-term wealth creation, entering equities through the SIP route, and that base has been increasing. You rightly said that it's currently around 8,200 crores on a monthly basis, and we think that should remain steady year on. And the reason for that is that there's a lot of awareness now there between investors. They are not looking at equities from a one-year perspective. Even during volatile times last calendar year where we saw a sharp correction, people have stuck to the monthly inflows. And overall, I think if you look at the ownership of equity in India, is still very low. I mean, just about 5.5% or so. And with penetration driving into smaller town and cities, we think the flow into equities will continue. Currently, there has been slight slowdown. Last 1 month, we have seen flows come down, but that is mainly the lump sum flows, which would have slowed down. But the current run rate of around 9 to 10,000 crores on a monthly basis, this will also include the money which is coming through ETFs. So ETFs have also become fairly large now. They are around 2,000 crores. A lot of the pension fund, EPFOs have to mandatorily invest around 15% in equities. That money is coming in through ETFs. So we have 8,000 crores through SIP, 2,000 crores through ETFs. So around 10,000 crores run rate, I think, should be sustainable. And that should provide good support to equity markets, especially at times when FIs flows tend to be very volatile. We saw last year when FI pulled out almost like $4-5 billion. I think this flow was what was really supporting the market. And I think that balance, the right shift between balance between FI flows and domestic flow, I think should do well to reduce the volatility in our markets compared to some of the other global markets.
Okay, Mahesh. Now let's get to specifics. Okay, we've spoken about how the broader macro perspective and liquidity seems to be good. Let's get into specific things. First of all, what's the overall outlook for 2019 for stock markets?
So I think after 2018, which was a pretty bad year for the markets, we think that 2019 should be a better year because we are seeing on the micro front, things are starting to improve. Clearly, earnings growth, corporate earnings growth is the best barometer, and that's what really drive equity markets from a longer term perspective. We are seeing a recovery over there. The early signs, I mean, this quarter has been kind of a mixed bag, but I think we are seeing FY20 as we move forward, pretty strong recovery in earnings, primarily driven by financials, mainly the corporate banks. So the banking sector has gone through a lot of pain, high NPAs. We're seeing that peaking out. There's been good recovery because of the bankruptcy process, the IBC process. And we're seeing overall slippages coming down. So a big, strong recovery in the corporate banks. And across the sectors, I mean, some of the domestic cyclicals should show a good recovery getting into FY20.
Great. Let's talk about specifics in terms of broad sectors, or so to say, large cap versus mid and small cap, right? Because mid and small caps, 2018 was rougher on them than on the large caps. What's your view on these two broader areas of the market, large caps and mid and small caps?
So in last calendar year, we've seen the mid cap and small cap have seen a significant correction. So while Nifty was more or less flattish or mildly higher, the mid cap index was down around 18%. The small cap index was down 28%. And post that, I think the mid and small cap valuations, which had gone higher and we were worried at the beginning of the last calendar year, I think that has moderated down. So now if you look at the valuation of the mid cap, They are slightly below the large caps. Small caps would be still below, which is probably in line with their long-term average P multiples.
Sure.
And the earnings growth in the mid and small cap is also improving. A lot of companies are making losses. They are seeing a turnaround over there. And as the domestic economy recovers, you should see a better growth trajectory in the small and mid cap space. So I think the risk reward looks favorable now for small and mid caps. And I think investors should also in their portfolios have the right allocation towards each of the category of funds depending on the risk return and the risk appetite of individual investors.
Great. Last question for our listeners. Someone who's totally, completely new to equities, to stock markets, and who wants to start there, who wants to make a beginning into investing into stocks, what would be your advice to them?
So I think anybody coming new into equities, I think you should first understand that the near term, the markets can be volatile. So while there's always a tendency to really make one co-investment, I think we've seen that investors over a period of time who have come through the SIP route have been able to take care of the short-term volatility. So I think it's best to start with small investment and invest regularly, increase that allocation, initially make a small allocation towards equity. And initially, I would advise for a first-time investor to really choose a simple product. Okay, so the best fund would be a kind of a multi-cap fund or a large-cap fund, or somebody looking to look at slightly lower volatility, a balanced fund. Okay, where the equity component would be like a multi-cap fund and some component of debt would also be a good vehicle to really start off as the initial investment. And slowly, as one gains more experience and wants to diversify the portfolio, one can add, say, a mid-cap or small-cap fund to the portfolio. And then in advanced stage, one can add one of the thematic funds. And that's how the approach and journey should be for new investors who would like to get into equities through the mutual fund route.
Fantastic. And on that positive note, folks, that is a wrap. For more such interesting know-hows, continue listening to our podcast, MF101, or simply follow the blog page of Aditya Birla Sun Life Mutual Fund, Bloomberg Quint, IVM Podcast, or wherever you get your podcast from. If you have any queries or some specific subjects you want us to talk about with regards to mutual fund investment, reach out to us on our Twitter handle @ABCABSLMF. That's @ABCABSLMF. Thank you for listening to this podcast. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully. The views and opinions expressed herein are personal and do not necessarily reflect the views of Aditya Birla Sun Life AMC Limited, that's ABSL AMC, Aditya Birla Sun Life Mutual Fund, the fund. ABSL AMC, the fund, is not guaranteeing, offering, communicating any indicative yield or returns on investments.
Advertising is dead. Yep, you heard me right. Advertising is dead. We're all in the content business now. Let's not call it news, TV, radio, etc., etc. It's all content, and we're in the middle of this weirdly exciting phase where all the borders and lines that have been drawn over decades has been swept away by this lovely thing called the internet. We're a show where we don't dwell on just the stuff that is now, but rather the wider stuff about advertising, media, content, and the whole goddamn circus surrounding it. Tune in every Tuesday for our weekly unboxing of the mystery box we used to call advertising. I'm Varun Dugirala, co-founder and content chief at The Glitch, and this is my new podcast, Advertising is Dead.
Hi, my name is Anupam Gupta. I'm B50 on Twitter. I am the host of Paisa Vaisa, the show that talks money. On my show, I speak to experts from every field of money and finance, from stock markets, equities, debt funds, credit cards, life insurance, every possible area of money and finance that you can think of. We even did an episode on cryptocurrency. I've got fantastic guests from mutual funds to personal finance experts everywhere. Robo-advisory, startups, just name it, we've got it. At Paisa Vaisa, we help you make smart decisions about money. You work hard for money. Now make your money work hard for you. New episodes out every Monday, and you can listen to my show on the IVM Podcast app or any other podcasting app that you have.